I'm Steve Nison, founder and CEO of CandleCharts.com, and joining me will be Paul Siegel, president, with some exciting details about some new educational resources. And as shown by the title here, Markets of Your Choice. And before we begin, we always do our risk disclosure and reminding you about the risk of loss in trading in pretty much any market. And you can go to the link down here at the bottom, www.candlecharts.com/disclosure if you want to read the whole thing. So let's start with the markets here, the main markets. All right, we got a request. We'll do the composite. We had a lot of requests for the major markets, so we'll start with those. For those new to the way I look at the market for longer term trend is I will look at a 20 and a 50-day moving average. And the blue line is a 20-day. These are simple moving averages. And the red line is a 50-day moving average. And especially if they're both sloping up, the trend is up. Keep in mind, as useful as Western indicators are like moving averages, remember, these are lagging indicators. So many times, by the time the long-term trend turns down, the market will be down quite sharply. So here's an example here. Here we had a doji. Okay, at the rally, notice the long-term trend was up, but we got a potential reversal signal, especially with bearish confirmation under the close of the doji, the next session. And notice by the time the long-term trend turned down, the market was, all the way down here. So, but I like to use this sort of a gauge, rough gauge. So here we have the composite long-term trend is up. And recently we've been having all-time highs, so it was hard to get a resistance area. But now with the multi-tested resistance area here around 13,000, I think we have a clean-cut resistance area. Now, one of my favorite strategies is change of polarity, where old resistance becomes potential support. So based on this resistance area, if the market closes above 13,000, if the market is solid, the composite is solid, that old resistance, in theory, should become support. But right now, it's banging its head against a resistance area. Let me just make this a little bigger here. And as far as support, my first support area is a small rising window right here. Okay, you can see how that became a support area. And I like small windows. Look at this. See this tiny window here? Really, really small. And the rising window, see how the bottom of the rising window became a support area. The market moved under it, but as long as it doesn't close under it, that's still a support area. Look how solid that support was. So these are the parameters for the composite. Okay, requests on the S&P. Okay, here again, the long-term trend is up, but a big bearish engulfing pattern. The market did not close under the rising window. See the rising window over here? But nonetheless, it's such a big move under it. I would have to say, first of all, the bearish engulfing pattern, we had two bearish engulfing patterns. Okay, one here, right over here, and one made today. So I would view this as a potential resistance area. And as for support, looking at today's long lower shadow, not a hammer, remember, there's not a hammer, confirming the lower shadow area right around 29,750. Although these are not hammers, remember, hammer has to come after a downtrend and has to have a little bit of a less of an upper shadow. Nonetheless, what does the long lower shadow tell us? That the market is rejecting lower levels. So you can see it did it here and it did it here. So right around today's low down to the lows over the past few weeks, okay, is potential support. Okay, the S&P. It looks similar to the Dow. Okay, the long-term trend is up, and keep in mind, these markets are still in bull channels. So nice bull channel. If you want to look at the more recent action, right over here, the bull channel. So there's still bull channels, but today's red candle, this is actually the longest red candle we've had in a while, bearish candle, forms another bearish engulfing pattern here, a little dark cloud cover here. And so similar to the Dow. We're going to make a resistance zone here. And just as I mentioned with the composite a couple of markets ago, if the market closes above this old resistance, in order for the short-term trend to remain positive, right now the short-term trend is down, but in order for the short-term trend to stay positive on a close above this resistance, this old resistance must hold as support. And what I'm looking at here, although we had a somewhat long lower shadow today, I think more important is this rising window. You can see why I like windows so much, gaps. See, the whole window is potential support. The bottom of the window is the key support area. So here we have support right around potential 36.25 on the S&P. Okay, let's look at the Nifty. We've got a lot of more. We have clients from 85 countries around the world and a lot from India. So, because the way this is quoted and overseas, I normally would look at a weekly chart because look at the daily chart, seeing all the gaps there. So I will look at a weekly chart. And we could see, interestingly, how there's key resistance. Again, this is the Nifty index. Okay. Right at around 38.50. And the market got above it last week, but didn't close above it. So on a weekly basis, I'm viewing 38.50 as a key resistance area. And you can see this horizontal line, just 1 day's worth of trading. Obviously, we don't have the end of the week. We need that for a weekly chart. Long-term trend is up. Okay, bull channel. But you can see how the market a couple of weeks ago got right to that resistance, pulled back last week, had a pretty strong session, but now the market, the Nifty, is at a key resistance area. So I'll be keeping an eye on that based on the weekly. Let's go back to a daily chart here. Okay, we've got some requests for some index, some currencies. So we'll look at a few of those. Shooting star today in the Euro US. And what does that confirm? What do we have here? Let me make a little, here we go, rectangle. Okay, a bearish engulfing pattern. And bearish engulfing pattern, top of the bearish engulfing pattern is potential resistance. And that's where the Euro US stalled today at around 123. The short-term trend I'm having as neutral to a little bearish because of the bearish engulfing pattern and the shooting star. But, long-term trend is up over the past couple of weeks. This market's still in the bull channel. Okay. So on a longer-term basis, I think it looks okay, but we do have a burden right around the recent highs of 123. And as for support, potential support, whenever I talk about support or resistance, obviously talking about potential key support or resistance, we have the rising support line, okay, which tomorrow will intersect right around the 122 level. But the main hurdle is a close above 123. And then if we get a weekly close, again, there's a weekly chart above 123. Okay, then we're looking potentially at the highs going back to early 18 around 124.50. So, keep an eye on this resistance area. Okay, we'll be a lot of other requests. We'll be looking at Tesla, Apple, a lot of the other indexes. We'll be looking at gold and crude and so forth. But before I do that, let me just quickly go over a special that we're running. Paul will tell you more about this, but some of you, may be familiar with it already because we're getting some requests. And essentially, these are two ways you're going to be able to meet your financial resolution. And I would guess your resolution is to make hopefully more money or lose less. And we have two main ways of doing this. We have the Hajime. We like to use the Japanese word. Hajime means beginning or introduction. And this is a great way to discover how to use candles effectively if you're new to using candles in your trading or investing, and the Kaizen on demand. And this is for those who are more advanced with candles and want to make continuing improvements in their trading investments. Kaizen actually is a Japanese word, means continuous improvement. The link down here is going to provide you more details, but I wanted to mention this because we're running a special. If you use this code, you're going to get a 20% coupon. And when you go to this page here, you'll see these options here about knowing which candlestick trading is best for you. So you'll fill this in, and then you'll submit it, and we'll tell you which is the best, either the Hajime or the Kaizen. And of course, you can always contact Paul for details about which is the best for you. And Paul's going to talk much more about this when I'm done with my markets of your choice. But I wanted to kind of bring you up to speed on this because we're really, really excited about it. Okay, so we're going to look at some others, but let's go. We have some requests for some other currencies. Now, keep in mind, even if you don't trade these markets, the strategies, the candle signals, the ways we look at, or I look at candles and Western technicals can help you in your market. For example, we talked about the windows, and we saw how the windows in a few of the recent markets held nicely as support. So maybe you don't trade the S&P or, one of the other markets that I forgot that had a window, but now you know the importance of windows. Right? Okay, so we'll look at the pound dollar. Long-term trend is up. We have an evening doji star, a little bit more advanced candlestick signal. You have a green candle, a small wheel body, in this case a doji, and the red candle gets deeply into the green. Obviously, it wrapped around it. It's not a bearish engulfing pattern because they're not consecutive, but nonetheless, it does become a potential resistance area right around 137. Okay, long-term trend up. Short-term trend is still up. Nudge a little bit more neutral because of the evening doji star. And what I'll do, if I don't see any clean-cut support areas here, we may have potential support at the lows here. But I like looking, especially in Forex, because they're so popular, Fibonacci retracements. Okay, Fibonacci is used much more in Forex than in equities. So these are some Fibonacci levels to look at, 38%, 50%, and 61.8%. My favorite is the 50% correction around 134.11. Okay, let's look at Apple. And I see we have a lot of questions. Stay online because Paul will be addressing the questions when I'm done when I'm done with this segment here. Okay, so what do we have? Let me get here. This is what we look for. Yeah, I'll tell you what I mean in a minute. Okay, anybody recognize this candlestick signal? Basic candlestick signal. Red real body wrapping around a green real body. Right, a bearish engulfing pattern. And look at the size, and this is when an engulfing pattern becomes more important. We should be comparing the size of the real bodies. If we have the same size red real body and green real body, it could still be a bearish engulfing pattern, but it doesn't have the bearish implications or potential bearish implications as we do with this long red real body. Think about this. The market gapped higher. Look how gapped higher on the opening, and by the end of the day, closed decisively lower. And in theory, the bearish engulfing pattern should be resistance. Look what we got here. Can anybody recognize this? Not quite a bearish engulfing pattern because the red real body didn't get into the black real body. Dark cloud cover, right? And we did get a request for the Nifty, and we just did that a couple of minutes ago, VJ. So, check the video of this session. Dark cloud cover, confirming a resistance area, i.e. a bearish engulfing pattern. So yes, the long-term trend is up. The 20 is above the 50. But as I mentioned before, this is what candles are great at. The long-term trend was up, but we got a bearish candlestick signal. So for those who are only looking at Western signals like these moving averages, they still would have been bullish. this was a strong warning signal, not only because of the bearish candle signal, but it confirmed another bearish candlestick signal. And this is what education in candles is all about, giving you those early reversal signals ahead of those who don't understand candles correctly or don't even use candles. So anyway, the short-term trend is now down. We're in a bear channel over the past couple of months, past few weeks here. On a closing basis, we could say the rising window is support, but I'm more comfortable because we broke so much under it. I would rather use an intraday support area. And with that, you don't get many windows in Forex. The windows really become over the weekend when there's no trading for a day. So here we had a small rising window. And look at this, almost to the pip, that rising window held as support. So my support area of consequence potentially is down at 124. And of course, key resistance at the aforementioned 138 area. Okay, that was, oh, sorry, I said pips. I mean, got to, just within a few cents of the bottom of the window. We were looking at currencies before, so my mind was on pips. Okay, let's look at Tesla. Okay, the problem with Tesla is, and a lot of these other markets, until recently anyway, I have no areas of potential resistance because I like looking at prior highs, and since Tesla is in uncharted territory, really can't give you an important resistance area. What I do sometimes is I'm making a rising resistance line. See? So notice how you connect the highs here and here, and notice how it intersected today. So, and the market pulled back a little bit, so it's not really bearish because the market, normally resistance lines are falling, but this is a way that sometimes the market, we get an area, at least we see a potential pullback. So I'd look at this rising resistance line. Short-term trend is up, long-term trend is up. And potential support, we could look at a rising support line. Okay, as long as it's tested a few times, and because it's an ascending support line, okay, the support is higher each day. So currently, tomorrow it looks like around 675. And just to show you weekly for those who's not following this stock. Okay. All right. Okay, now we look at some requests here. We'll look at crude. Long-term trend up, short-term trend neutral. A classic bearish engulfing pattern. Red wrapping around the green. Market poked its head above it, but couldn't hold above it. And this is actually bearish short-term because here's a resistance area, actually a zone here. And the market got above it. Crude, this is a nearby futures contract, by the way, in crude. If the market was good, remember I was talking about, I think, the first market, the composite, where we had clean-cut resistance area, and I said if we get above it, the old resistance has to hold the support. Same thing here. The market got above resistance, crude got above resistance, but couldn't hold above it. That's a short-term bearish signal. We call that, the Japanese call it falling off the roof, because they say it's like climbing the roof and then take away the ladder. And in theory, the target is the most recent low, which is down here. And that actually is my first potential support area. Make it a zone here. Okay, right around $46. And resistance, based on an intraday, just would be today's high, potentially. And you can see why the market, this is a weekly chart of crude. And you can see why the market's stalling here. Look at the window, falling window. The whole window, the whole falling window is potential resistance. See? With the major potential resistance at the top of the falling window. And look where the market's stalling. Oh, this is a weekly chart over the last 3 weeks, including today. Right around $50. Okay, let's look at jets. And we'll look at a few more, covering all the requests. Okay, we'll look at the daily. Okay. short-term trend down. Long-term trend is up, but notice something interesting. Okay. Oops. I'm trying to encircle this. Notice the slope of the 20-day. Notice the slope of the 20-day. It's sloping down. So although the long-term trend is up, it mitigates some of the bullishness, also some of the long-term positive aspect, because the slope is down. But long-term trend is still up. Short-term trend is down. Here, once again, okay, we have a clean-cut resistance area, multi-tested resistance, which intersected near a prior support area. See, as long as support is tested at least twice, and here we have 1, 2, 3, 4 times, we could use the change of polarity. So this old support area, multi-tested, and we gap lower. Although the market got above the rising window, it couldn't get above this change of polarity. And look what happened today. So key resistance still around 2270. This is a new close for the move. Market's in a bear channel. And where are we looking for support? Not surprisingly, here we have notice this rising window. Here's the top of the rising window. But remember, where did I say the most important support is with a window? With a rising window, it's the bottom of the rising window. Here again, even if you don't trade this particular market, these are all concepts you use in your own trading and investing. And look what held here and is holding so far. So we're at a potential support area, 2140. Okay, and then under that would be potentially this next rising window towards the 2030 area, 2040 to 2020 in that area. Okay. Now, although this is a resistance, potential resistance, we may have first resistance right here. 1, 2, 3. Notice how late last week, 2220 was a support area. On the way up, it may be resistance because the reason for this is that anybody who bought here last week is now losing money. So the buyers here, if the market bounces, may be thrilled to get out at break even over here. This is a low price stock, so it's not a big deal, to be losing 80 cents or so. But, that's the theory behind the change of polarity, especially when you break a support area. The buyers here are losing money, and then when it bounces back, they are thrilled to break even, and so the buyers here become sellers. Okay, we'll look at a couple more. Then I'm going to turn it over to Paul. Okay, we have gold. Let's look at gold. Okay. Actually, I'm going to look at the futures. It's a cleaner chart. It doesn't have all these gaps. Okay, so there's a nearby continuation contract on gold. And not surprisingly, with the market down, gold is up quite a bit. Long-term trend neutral. The 20 is touching the 50-day. So it's neutral. And the short-term trend obviously up. Okay, breakout, a very small rising window here. Okay, the high yesterday was 1905, rounding off. The low today was 1906. So we have a penny gap. A gap is a gap. A window is a window. That and this old resistance area right around 1900, I view as resistant support. And here we have a classic evening star, a bearish engulfing pattern, defines our next potential resistance up at 1970. We're here. Okay, and let's look at got a request for the dollar yen. Long-term trend down, short-term trend down. Nudge it a little bit more to neutral, however, on the short-term trend. Why? Okay. See that all the support here, here, and here. The market got under it, but was not able to close under the lows here of 102.80. So at least through today, it's showing us that the bears can't hold control short term. That's a little bit of a positive. It's actually called a crack and snap, where you crack under support and snap back. And in theory, the target is the most recent high towards this dark cloud cover. So this is my resistance area. And the dark cloud cover is also confirming, the highs from a few days before that, okay, around 103.90. And the lows today, I would have as first potential support. Okay, make sure I got all markets. Okay, we'll look at two more. Okay, Boeing. Long-term trend up, but the 20-day sloping down. So that's a little bit negative. Short-term trend down. And let me tell you what the issue is going to be. Okay, obviously a bear channel, but you see this prior support area here. We have change of polarity, old support in theory becomes resistance. And another hurdle would be the falling window. There's a breakaway gap where you gap away from a support area. So we have two potential reasons for strong resistance towards 212, the falling window and the change of polarity. And my next potential support area would be this rising window here all the way down right around 186. Okay, and that wraps it up for here. So let me turn it over to Paul with some exciting details. I was mentioning about the Hajime. Let me get back here. Okay, Hajime and the Kaizen, and Paul will get on now to tell you about it. Thanks for joining me, and I hope you found this very useful.
Thanks, Steve. And I know there's a couple other questions that came in for you, Steve. So if you could stick around a couple minutes after I'm done to possibly answer a question, that would be great.
Sure.
So I'm going to take just a few minutes to talk about our incredible resolution program, okay? So I'm going to give you the quick snapshot. You're more than welcome to reach out for questions. I know that I've gotten a bunch of questions already here during the session. What we've been finding more and more is that the education that Steve and our team provides is incredible. But being able to apply that education through what I'm calling a skill set is really what makes you successful. Meaning you can understand what a bullish engulfing pattern is. If you don't know how to apply it and how to utilize it on a chart, it really doesn't mean anything that you understand what it is. Meaning I understand how you're supposed to hit a golf ball the right way. Doesn't make me a great golfer. So to make sure everybody understands, we have 3 different websites. They're all our company. Candlecharts.com is the original company. Steve founded it. That is for information purposes. We also have 2 main sites that we want our students to utilize. One is Candlecharts Academy. This is where our library is of all of our programs like Frontline Forex, Mega Package, all of our software resources and things of that nature. Consider it to be a library where you're going to go in, self-study courses. But we also have mycandlecharts.com. I look at this as where we're going to help you build your skill set. Think about this structure as going into college, taking a bio lecture. That bio lecture would be the academy, but a bio lab where you're actually putting it to use would be my candle chart. So daily interaction. Okay, I'll get into more details on those too, but let me tell you about the 2 programs that we have available for you. We have Hajime, as Steve was talking. Hajime is our beginning/introductory program. It's for people that are either new to candles or they want to make sure that they're using them correctly. We get often people say, hey, I know candles. I learned about it online. Well, there might be some well-intentioned people out online providing some candle education, but you have to, if you're going to get candle education, why would you not want to get it from Steve Nison and his team? So Hajime is a beginning and introductory program. I'm going to show you details in a second, but we also have Kaizen on demand. This is more for our intermediate and above level traders and investors. We just finished a Kaizen Live program that ended a couple of weeks ago. We turned that program into a Kaizen on demand. Again, this is for intermediate to advanced level traders, and I'm going to show you details on that in a second. So let's start with Hajime. Hajime in Japanese means beginning or introduction. Because of that, we know we have a lot of people that have New Year's resolution that want to get going. They want to make sure that they can make money. When I bring up resolution, think about this. We're already more than 10% of the way through the month of January. Think about that. If you're already not working towards your goals, you're already 10% into the month of January. The other thing I want to bring up, somebody asked me this morning, I was on a phone call, they said, why would I want to trade? Trading is risky. And so I asked, well, what else would you do with your money? And he goes, well, I'll just put it in the bank, put it into a CD if I need to. Well, just out of curiosity, I looked up what a current CD rate is right now. Anyone want to type in what they believe a current CD rate is for 1 year? Call it a 1 year CD. I just got somebody type in 1%, somebody typed in 2%. Let me tell you, I looked it up out of curiosity. The best rate that I could find for 1 year was about 0.5% interest. You guys can all do that math. Talk about risk. You're actually losing money by putting money into a CD with inflation. So here's inflation. Here's Hajime, how to counteract that. Hajime is a program that, when I said earlier, we're going to provide you with education and provide you with a skill set. Hajime includes 3 pre-recorded videos. The first is our Candlestick Express class, 3.5-hour course, all online inside of our site at Candle Charts Academy. In addition to that, Boss just wrote, it would take 144 years to double your money at a 0.5% rate on a CD. Think about that. Great point. Thank you. So Hajime includes our Express class. It also includes Video Training 1 and Video Training 2, where we're going to go over how to get you going the right direction in your trading, meaning how to fund your account. What markets are the right markets for you to trade? Not for me to trade, but for you. We're going to get into video session 2. We're going to get into more detail, how to enter, identifying points to exit. Now, here's one of my favorite things. We've never done this before with Hajime. We're now adding in 1 month access to our other site at My Candle Charts, meaning we want to give you the education that you need to get the correct beginning through the Express Video Training 1 and 2. And then we want to provide you with a skill set with 1 month access to My Candle Charts. For those of you not familiar with My Candle Charts, this is where we have daily ongoing guidance through daily market recaps, strategy sessions. What is a strategy session? It's where you as a member get to request a market to be analyzed. I don't know about you, but if I want to trade, why would you not want Steve Nison's opinion on that chart before you get into that trade? So that's our Hajime program. Let me talk briefly about Kaizen because Steve is going to get back on and answer a couple more questions. Questions that are coming in. By the way, I will stick around as well for questions after. Yes, this works in all markets. We have students in India that just completed our Kaizen program as well as through the Hajime program. Kaizen, let me tell you what is included in Kaizen. It's all located inside of our site at mycandlecharts.com. So you have 2 full months of access to that site. You have a private consultation with me. Why is that important? It's not anything important for me. I will make sure that you're on the right track. Because of my position here, I get to talk to traders of all levels from around the globe, from people that are just starting out, that have never made a trade before, all the way to our hedge fund managers that are current clientele. Now, you're saying, why would a hedge fund manager want this? They want to get Steve and our team's analytical ability to analyze charts for them twice a week. Every Monday and Thursday, we do strategy sessions. We have 7 intensive, interactive, pre-recorded sessions. Each session is about 1.5 hours to 2 hours. It will take you through an entire gamut of how to trade in the markets, no matter where you are in the world. You'll have interaction with the trainers. Our trainers are 2 Nison certified traders who are Brian and Sil. You'll have interaction with them via direct email access and through our discussion forum. You'll actually have an individual one-on-one coaching session with either Brian or Sil. You'll have weekly homework assignments, a final exam, and an actual certificate when you pass that exam showing you that you are a Kaizen technician. Here's some feedback from Kaizen students that just completed the course in the last couple of weeks. I'm not going to read all of this to you. The last line of this first comment: highly recommend the Kaizen apprenticeship training to anyone that are serious about trading the markets. You can't ask for anything more than that. Next comment: the 30-minute coaching session with Brian was exceptionally great. I have been overcomplicating and overthinking the way I look at the market. Within a few minutes, he helped me to see things differently. Priceless. I love that comment. And the last one I wanted to show you: I'm now more readily able to identify areas of support and resistance and how candles identify changes in market psychology. Look at this last line: I look forward to implementing these strategies following my new trading plan during market hours and vastly improving my profits. So with that, I want to tell you our link, and I put it in there. I'll type it in again: candlecharts.com/special/resolution. We're giving you a coupon code. The code is resolution. This will take 20% off of either the Hajime program or the Kaizen on Demand program. But please note, this coupon code is only good until January 10th. After January 10th, meaning starting on January 11th, you can still get going with either the Hajime or the Kaizen on Demand. You just will not get that additional discount. So if you want to achieve your financial resolutions, these 2 programs have been designed specifically to get you going on the right path for you. That code resolution is only going to help you get going quicker. So with that, I will certainly stay on for questions for me about any programs that we have. If there are questions that you have for Steve, Steve graciously has said that he will stay on and answer a couple more questions. Steve, the one question I got was, can you just briefly explain the change of polarity one more time? People want to know, how many times do you need to hit either support or resistance for it to be strong enough for it to be considered a change of polarity? Steve, if you're there, go ahead.
Yeah, yep. Let me just get my slide up again. There we go. Okay, so here's an example. So the change of polarity, prior support tested at least twice may become resistance. So here's an example. Okay, 1, 2, 3. So because it was tested 3 times, I would view this as change of polarity. Let me look at an example here. So change of polarity, this old support becomes resistance, and it would be the opposite. Well, let me go back here to show you what it would not be a change of polarity. So notice the low here. Okay. All right. Over here. Now let me make it a little bit more concrete. Give something a little easier here. All right. So let's go over here. All right. So here we have support and another support area here. So this would be change of polarity, but I would nudge it a little bit more. Why? Because we have the falling window, right? So what that means is this old support area, change of polarity, the falling window should be resistance, and notice how nicely it held. And that means if the market gets above it, that's actually a bullish breakout, all right? So the change of polarity, it has to be tested at least twice. It doesn't have to be consecutive. Let me show you in the S&P, the NASDAQ. Oops. So the reason I was saying the change of polarity, and it doesn't have to be exactly the same height, it could be a zone here. Look how many times this resistance area was tested. So on a close above it, in theory, this old resistance should be a support area. I would not use the change of polarity. Okay, see the resistance here? The market got above it. I wouldn't use the change of polarity because it was only tested, one time. All right. So it has to be tested at least a few times. Here, I'd use change of polarity. Okay, 1, 2. If the market got under that old support area would become resistance. So long answer to a short question, it should be tested at least twice with a change of polarity. And that's one of the things we discuss in our educational resources. Okay, over to you, Paul.
Thank you, Steve. So at that point, I would like to thank Steve for his time and going over the markets. As always, it is very beneficial for everyone. Even if it was a market that Steve analyzed that you don't trade, a couple things. One, you'll see how Steve analyzes charts. And two, even if you don't trade it, you can learn from that and how to apply that to the markets that you do trade. And I can also tell you that as a trader myself, you will find times and opportunities to trade based on what other people are actually looking at. So I've made trades before based on what people have requested, and we analyzed it, and I took a look at it, and fantastic trade opportunities. Those things happen every day inside of mycandlecharts.com, where we go over multiple markets every day in the daily market recap. We go over international markets. We go over Forex every day in the daily recap, but we also go over specifically a Forex session every Tuesday. Every Wednesday, we do an options outlook session where we teach options from the basic level all the way up. We do every morning a trade setup of the day video where we talk about a trade that we're either doing or possibly doing that day based on the criteria. We do a chart of the day. We do a chart challenge. There's a lot of resources inside of my candle charts. So I got a bunch of questions about our programs. As you can see on the screen now, Hajime on the left, Kaizen on demand on the right. So if you have a question, please by all means type that in. We had a question, I'm in India, does this work? Absolutely. We have multiple students from India doing both Hajime and Kaizen on demand. How long do we have access? Boz, if you had which program were you referring to? I'll just talk real brief. With Hajime, remember there's a couple of components to Hajime. The Express class and video sessions 1 and 2. Those are all accessed for 1 full year inside of Candle Charts Academy, but Hajime also comes with 1 month of access into mycandlecharts.com. You can certainly always upgrade your My Candle Charts to a longer subscription if you wanted to go beyond that 1 month, but we give you 1 month in that program. Kaizen on Demand comes with 2 months of access inside of My Candle Charts. However, if you are already a member of My Candle Charts, all we would do is just add 2 months of access on the end of your renewal date, if that makes sense. So if you're on the annual plan, for example, we would just bump out your expiration by those 2 months. If you're on the lifetime My Candle Chart membership, what we would do is instead of giving you 2 months of My Candle Charts, which you wouldn't need, you're already a lifetime member, we would actually add 1 additional coaching session for you instead of those 2 months. That coaching session is incredible value. Again, the coaching would either be with Brian or Sil, or 2 Nison certified trainers. Godfrey saying you have the mega package. What other training is good for you? Godfrey, absolutely. Since you have the mega package, I would absolutely recommend taking a look at the Kaizen on Demand program for you. So if you go to that link, candlecharts.com/special/resolution, there you'll see what you see on the screen with Hajime and Kaizen on Demand. There will be yellow buttons underneath each. So you could click on the yellow button, Godfrey, under the Kaizen on Demand, and that'll show you all the details about Kaizen on Demand program. The same way if you clicked on the yellow button under Hajime, if you go to that link at candlecharts.com/special/resolution. Remember that coupon code RESOLUTION is good to save 20% off of either Hajime or Kaizen on Demand. That coupon code is only good until January 10th. After January 10th, you can still purchase either Hajime or Kaizen on demand. You just would not get that 20% discount. If you have other questions, I'd be more than happy to answer any of those for you right now regarding the programs. Happy New Year. Got a whole bunch of Happy New Years that just floated in. A bunch of people thanking Steve for doing tonight's session. We're here to help you. And remember what I said before, that education plus skill set is what we found to be the key components to success. Education, learning what candle patterns are all about is great, but if we don't know how to apply that, it might be worthless. So both programs, Hajime and Kaizen on Demand, are designed to provide you with both education and skill set, therefore success. Somebody just asked, can I buy both Hajime and Kaizen on Demand? Absolutely, you can do that. If you're going to do that, obviously I recommend going through the Hajime program first, and then we can work out the start date of that Kaizen on Demand. If there are any other questions, you can always email me, paul@candlecharts.com, or you can go to the link and fill out the form. And on that form, you'll find that it comes to our team, and our team will reach back to you to help you with that. Or you could always do a live chat. Again, all of our chat agents are traders and investors with extreme high-level candle knowledge. With that, I want to say one last time, Happy New Year. And we are here to assist you surpass your New Year's resolution and turn it from a resolution into an actual goal that you achieve and surpass. We don't like resolutions because they tend to be done typically in the first few weeks of the year. We want you to be profitable all year long. So thank you so much for attending. And we do look forward to working with you here at candlecharts.com, as well as Candlecharts Academy and mycandlecharts.com. Thank you.